What if the biggest XRP breakout signal isn't the chart, but Washington? Because while most people were distracted by memes and rate cut rumors, something major just happened behind the scenes. The Senate Banking Committee advanced the Clarity Act. Cynthia Lummis says lawmakers only have about 1% left to finalize bipartisan support. The crypto market cap just reclaimed $2.71 trillion. Whales are accumulating XRP at levels not seen since 2018. Institutional money is quietly flowing into spot XRP ETFs, and Ripple is expanding deeper into institutional finance infrastructure. This isn't one headline. It's pressure building across the entire system. And today, we're connecting all of it. Welcome back to Ledger Pulse. Quick disclaimer before we begin. Nothing in this video is financial advice. Always do your own research before making any investment decisions. That said, the market structure right now looks very different than it did just a few months ago. For the first time in a long time, regulation, liquidity, institutions, and sentiment all appear to be moving in the same direction simultaneously, and XRP is sitting directly in the middle of that conversation. Let's break it down. The biggest story right now may not actually be price, it's policy. According to Senator Cynthia Lummis, lawmakers have only about 1% of the Crypto Clarity Act left to finalize before broader bipartisan support is secured. At the same time, the Senate Banking Committee officially advanced the legislation toward a full Senate vote. That matters because for years, the crypto industry has been trapped in regulatory ambiguity. Nobody knew which assets were securities, which agencies had jurisdiction, or what rules companies were supposed to follow. And when uncertainty exists, capital stays on the sidelines. But now, Washington appears to be realizing that if the US doesn't build a framework soon, innovation simply leaves the country. That's why this moment feels different. Not because the bill is perfect, not because all political resistance is gone, but because the tone has shifted dramatically. We've gone from should crypto exist to how do we regulate it responsibly? That's a massive change, and markets are starting to price that in. While lawmakers were debating crypto regulation, the market quietly started moving again. Total crypto market cap reclaimed $2.71 trillion, a major psychological and structural level. And importantly, this move wasn't driven by pure retail mania. This looks far more like slow institutional positioning. You can feel the difference. The market isn't exploding vertically, it's grinding higher. That usually happens when larger capital rotates in carefully. Bitcoin remains strong, Ethereum is stabilizing, and XRP has started showing signs of relative strength after months of compression. That's where things get interesting, because XRP historically tends to lag, until suddenly it doesn't. When XRP wakes up, it often moves violently and faster than most expect, and the setup right now is beginning to resemble the early stages of those previous cycles. This next development might be one of the most important. According to sentiment data, XRP whales now hold over 45 billion tokens, the highest accumulation levels since 2018. Let's think about that. The largest wallets in the ecosystem are increasing exposure, while most retail investors are still skeptical. That usually matters, because whales don't buy aggressively during maximum hype. They accumulate during uncertainty, and historically, large wallet accumulation tends to happen before volatility expansions. Now, obviously, whale accumulation alone guarantee nothing, but when you combine regulatory progress, improving macro sentiment, institutional ETF inflows, and technical breakout attempts, it creates a much stronger narrative framework. The key point is this: smart money appears increasingly comfortable accumulating XRP before legal and regulatory clarity is fully complete. That tells you confidence may already be building behind the scenes. Now let's talk about the chart. After months trapped under a major descending trendline, XRP is finally beginning to test breakout territory. The current structure looks like compression nearing resolution, and compression phases are important because they often lead to explosive directional moves. The market has essentially been coiling for months. Bears are losing momentum, sellers appear exhausted, and buyers continue stepping in at higher lows. That creates pressure. Now, to be clear, confirmation still matters. A breakout is not real until price sustains above key resistance levels with volume. but this is probably the strongest technical structure XRP has shown in quite some time. And if macro conditions continue improving, this chart could become very difficult for sideline traders to ignore. Another story flying under the radar, Ripple Prime secured a $200 million debt facility from Neuberger Berman to expand institutional margin financing capabilities. This is important because it signals Ripple is continuing to build institutional-grade infrastructure, not just a token ecosystem. And that distinction matters. Most people still think of Ripple purely as the XRP company, but Ripple increasingly looks more like a financial infrastructure firm positioning itself for tokenized finance markets. Prime brokerage, institutional liquidity, custody, cross-border settlement, these are serious financial plumbing systems. And if tokenization becomes a real multi-trillion-dollar trend over the next decade, companies already integrated into institutional rails could benefit enormously. Again, none of this guarantees XRP price appreciation directly, but it does strengthen the long-term institutional narrative surrounding the ecosystem. Meanwhile, spot XRP ETFs just recorded their largest single-day inflows since January. That's another huge signal, because ETF flows matter more than social media hype. Why? Because flows represent actual capital allocation, and when institutions allocate capital, they usually research extensively, scale in slowly, and think in multi-year time horizons. The ETF era fundamentally changes crypto market structure. Instead of relying entirely on retail speculation, digital assets are increasingly becoming accessible through traditional financial rails. That opens the door to pension exposure, hedge funds, RIAs, institutional wealth platforms, and eventually broader retirement allocation models. The more accessible crypto becomes, the larger the potential liquidity pool becomes, and XRP is now firmly entering that conversation. Now here's where everything starts connecting. Individually, each headline matters, but together, they form a much bigger story. You have improving regulation, increasing institutional access, whale accumulation, strengthening technicals, ETF inflows, and expanding financial infrastructure. That combination creates the conditions for narrative acceleration, and markets move on narratives long before fundamentals fully materialize. That's why sentiment shifts are so important. A year ago, most mainstream conversations around XRP focus entirely on lawsuits and uncertainty. Now, the conversation is shifting toward infrastructure, adoption, ETFs, liquidity, and institutional integration. That is a completely different environment. So the big question becomes, is this finally the beginning of XRP's next major cycle? Nobody knows for certain, but what's undeniable is that the backdrop is improving fast. And if regulatory clarity truly arrives, the entire crypto market could enter a very different phase from what we've seen over the last few years, especially for assets tied directly to financial infrastructure narratives. But I want to hear from you. Do you think XRP is finally preparing for a major breakout? Or is this just another temporary hype cycle before another pullback? Drop your thoughts below. If you enjoyed this breakdown, make sure to like, subscribe, and turn on notifications so you never miss an episode. And I'll see you on the next one.